Hi, everyone. It's Arry here again, chair of the Cascadia Blockchain Council. For this particular panel, we forgot to press record in the beginning, so we missed the first 3 minutes of introductions. So I just wanted to give you a little bit of context about this panel. It's called Change, Resilience, and All About Bitcoin and DeFi. And we had some really, really great panelists join us. I wanted to introduce the panelist. The first panelist is or was Sam Bankman-Fried, the CEO and co-founder of FTX. We really specifically chose him to play the role of expert and mastermind super influencer in this DeFi space. Love what he's doing. And before he founded Alameda and then FTX, Sam was a trader on Jane Street Capital's international ETF desk. He traded a variety of ETFs, futures, currencies, and equities, and he designed their automatic OTC trading system. He also graduated from MIT with a degree in physics. Super smart. I hope you'll really enjoy his answers and his perspectives. I definitely did. The second panelist was Kory Hoang, the CEO, co-founder of Stably. So prior to Stably, Kory was a data analyst with PitchBook in Seattle, where he picked up the ABCs of venture capital fundraising. On the side, he's an active algorithmic trader, and he's advised many hedge funds on various topics from quantitative trading, momentum, and mean reversion strategies, and cryptocurrencies. Since 2018, he has led his stablecoin fintech startup through 3 venture funding rounds, secured major deals for Stably, and he's grown his team to quite large, and it's a multinational corporation right now. He is a BBA in finance and marketing from the University of Washington. I see him as an enabler in the space. He helps companies create and mint their own stablecoins, representing stuff like gold and palladium and real estate. So really, really fantastic perspective to the world of DeFi. And then the third but not last person is a guy named Tomasz Wojewoda. I'm sorry, I'm totally butchering his name. He's the CEO and founder of IGA Token, and he's actually going to play the role of the consumer of DeFi. So we have the influencer mastermind, which is Sam Bankman-Fried. We have the enabler, which is Kory Hoang, the CEO of Stably, and then we have the consumer, who is Tomasz. And so he's normally a biz dev and sales leader. He's worked in the Fortune 500s, Accenture, Avanade, Microsoft, NetApp. He has 15 years of experiencing world-class go-to-market initiatives focused on cloud, SaaS, and blockchain. And what he did was actually just launch his own DeFi token called AGA, A-G-A. So he has a very, very interesting perspective. On top of that, he's also a homegrown miner. He has lots and lots of miners in this cryptocurrency space. And so I hope you'll really, really enjoy his perspectives. My co-moderator is a man by the name of Michael Alcock. He is the founder of Proxima Flux. So he has lots of experience leading scaled engagements with both internal and external communities of practice. He designs, sells, and runs world-class and large-scale employee and customer engagement programs in software. He advises several small startups, which are also leading an audacious research effort in how to scale productive dialogue using AI. Super smart guy. He actually comes and is a big part of this club called 601 Club, which is a group of ambitious entrepreneurs and business owners and investors and people in the community. And so he's playing the role of someone who's new to the world of cryptocurrencies and DeFi. And so we play this co-moderator type of experience with this panel. I hope you really enjoy it. Thank you so much to the WTIA again, the Washington Technology Industry Association, for all of your support and sponsorship in this very important area. And I really hope you enjoy this panel. Definitely let us know if you have any questions or if you'd like different kind of panels to be produced. I'm always available, Arry at washingtontechnology.org, or you can come and check us out, the Blockchain Council at washingtontechnology.org. Thank you. Don't forget to rate, review, subscribe, and share. Bye.
I think that there's a lack of understanding about what freedom really means and what tokenization really means. That doesn't mean that, I think we'll get to that at some point, but it's definitely a point of confusion. So.
Sure.
Well, then, so those were some really good descriptions of what DeFi is. And I think maybe that's provided some clarity to some folks. But let's take the other side of the explanation of DeFi. So what does DeFi do that banks and institutions that we use today in terms of finance, what does DeFi do that these guys cannot do? Like, you know, Bank of America or Visa or credit unions, like all these places that we do finance with today. What does DeFi do that they can't do? Or help me figure that out, please.
Well, one of the very core major thing that DeFi enables is borderless, permissionless accessibility, right? Anybody, like I said, with internet can plug into, or you know, they have to have at least some basic knowledge on how to use MetaMask or how to use basic interfaces to access this ecosystem, right? But anybody with internet and a little bit of that knowledge can access the system. There's no barrier to entry. There's no, you know, minimum account balance requirement or anything that, you know, traditional institution put in place to prevent, you know, the underbanked or, you know, unbanked people from accessing financial services. So I think that's one of the very key features. And, you know, the borderless nature of it as well, right? Of course, internet is global, everywhere, right? So you can't stop it, or you can't, you know, impose capital control onto it easily, like a lot of countries do so to their monetary system.
Well, why does borderless and capital control matter? I think most of us are very lucky, of course, to be here in the United States, but like, could someone provide some context around that? Like, I mean, I can go to any country and bring my Visa card and use it, and I can get money out of any ATM. Like, what are you guys talking about?
Yeah, so I think this is something which, you know, particularly applies in countries, a bunch of countries in East Asia, where it's basically illegal to, it's sometimes unclear exactly what it means, but roughly speaking, illegal to sell their currency, illegal to take money out of the country, sort of, you know, variants on that. And so if you're in one of these countries, and this to varying extents includes China, South Korea, it sort of semi-includes a bunch of parts of Southeast Asia, then your wealth is to a decent extent trapped within your country, which is totally fine for many people. But if you are from one of those countries and you're looking to, you're looking to move, or you're looking to you know, visit another country, or to operate a business which is cross borders, you actually can't get your money out. It's just like you literally can't do it, except in sort of like fairly small quantities. And this is actually like a decent part of what drives some crypto flow, is people looking to make their wealth substantially more mobile than their home country does.
So this kind of, so if the future of finance is something along the lines of borderless and free, then there's a lot of responsibility that's being put onto individual human beings on the topic of finance and this whole understanding. So how do you think, generally people don't know anything about credit, debt, just anything about the macroeconomics, markets, finance. So how do you teach someone or teach a mass amount of people about the space so that they can start participating more in the space?
Or at least be prepared if all of the really, really rich people move their capital there and the rest of us don't understand why, because we're not, you know, running multinational companies that have cash flow issues.
Yeah, so it's, the space as it is right now is super cool and super unappealing to most people. And it does a lot of things that are like quite awesome and quite powerful. And I think that composability is sort of a good example of that, where if you have two different applications which are both written on the same blockchain, you can just effortlessly string them together. And so you can imagine if you have, you know, I don't know, some borrow lending protocol and some exchange, right? You might want to go use that borrow lending protocol as a way to get margin or leverage on the exchange, where basically you go borrow the thing that you want to short sell, you move it over to the exchange and you sell it. And there's some like dollars moving back and forth there that I'm sort of ignoring. And that's sort of automatic in DeFi. It's just all code in the same language on the same blockchain that anyone can call at any time. And you just write a quick wrapper that will, in one click, instantly call both in the same transaction. If you imagine doing this between Goldman's stock loan desk and you know, E-Trade, I mean, I don't even know. It's like you know, one step is moving your share of Apple between them. Like, how do you even do that? Now you have to send funds back. It's probably like 3 wire transfers. It takes a week. You know, you're gonna be paying like hundreds of dollars. It's like businesses are not built in the real world to hook up together as much as you know, as much as you want them to.
It's like trying to do Uber without an iPhone, right? You couldn't really make that happen, right? How do you get some car to show up at the location that you are standing in if you didn't have an iPhone? Same thing is happening in DeFi, where all of these applications are enabling us to develop new ideas, new applications, new businesses that have never been thought of, because now that E-Trade to JP Morgan transaction that would have been done between 3 and 5 PM via phone and fax is now done on a blockchain automatically 24/7. But the question was how people learn about it. And I think money motivates people. If they can see that they can get an interest, get some money, they go on YouTube and they learn. You know, my kids are interested because they see the little dollar signs. And I think a lot of this space is self-learned. I think a lot of investors, the people who are using these tools, maybe to transfer money between families or across borders in East Asia, are learning. There is a bit of, there's a lot of self-learning. I don't think there are books. I don't think there are, you know, many universities that teach this. It's self-learned. And it's amazing to see that you could argue that the underprivileged societies in, you know, basically people who don't have access to the same financial tools that we do in US are now getting way ahead, and they are becoming more proficient in the tools of the future, which is very interesting to see.
Kory, I saw you nodding your head.
Yeah, I agree with that sentiment. I think, you know, the profit motive, personal profit motive, is always a great driver for ordinary people to learn something new in order to benefit from it. I mean, I can't even give a very clear example of this. There's a client that we work with in Vietnam called VNDC. They are a local stablecoin company there. And, you know, they have this program where, you know, affiliates or brokers of that, you know, participate in the VNDC ecosystem could become affiliate brokers and become basically money changers, selling stablecoin for regular fiat and exchanging regular fiat for stablecoin, so on and so forth. And, you know, in the process of doing so, they can charge a spread, and they can charge a fee for themselves, and they can earn money. In Vietnam, money transmission regulations are like really lax. It's not like in the United States. So, you know, in such a market, that is possible, right? And so now you have a bunch of, you know, ordinary Vietnamese people that started trading stablecoin for fiat that to make a side income, you know, and think about that, right? I
think even before trading, we can talk about basics. With stable coins, someone with an access to a cell phone anywhere in the world can have Deutschmarks, US dollars, basically pay the rubles. You can probably get or the other products that Kory's company, you know, releases. That's hard to do. I can buy 1 ruble right now if I want to have it on my phone. That is, you know, that's hard to do even in US. I probably couldn't go to Wells Fargo and get it done during the day because they would probably say, oh, they have to come from New York. You get them in a week. Just simple things like that. Well, why does it matter? it matters more to some people than others, but I think the ideas or the why is still, a lot of it is uninvented. It's yet to come.
So when the internet was born, right, nobody knew that they needed a website for their business, right? And then the internet had problems because we were innovating on it, and the whole internet seemed like it was all brochureware at some point, right? There were no actual transactions going on. Is there an analogy that you can give us? I mean, clearly from what you're saying and the level of what this technology can do, this is as big as, you know, the birth of the internet, right? So where are we on that chain, right? If you remember your early internet stories, I don't know if you do, but if you can draw an analogy for us, those of us who've lived the last 15 years watching that technology change, right? Can you give us something to help us sort of anchor ourselves?
Yeah, I would say two things. I think this is much bigger than internet. Internet is a medium of communication, which is very important.
Okay.
But this is all the money in the world, right? This is about finance and insurance, everything finance with the big F and money with the big N.
Okay.
So therefore, I would say that if I were to say, I will take away all of that you own, or I will take away your internet, most people would say, take away my internet. It's very important, but everything else I own is even more important. So I think blockchain, Bitcoin is bigger than the internet. The DeFi space that we are talking about, it's basically finance. It's the things that, you know, the guys on Wall Street do in Chicago and insurance companies that have been a bit kind of behind a glass wall from a lot of other people.
Right.
Now it's coming a little more to the masses. It's the finance part of it, but it's a sub part of the blockchain ecosystem.
Interesting.
Now, I'm going to disagree a little bit. I would take the internet over it in almost all worlds. I think it's not close to being close. I do think it's super cool though, and I think that like the internet is literally the most important thing that has ever happened, you know, in the history of the world. So that's like a pretty tall bar to kind of compare it to. And some like contingency in that, but I do think, and I think that there's a world in which DeFi just sort of peters out and doesn't get anywhere. But I do think there's a world in which it gets huge, and I think that there's a world in which, you know, 20% of the world's activity ends up happening on chain, and I think that would be a super interesting world. It'd be different in a lot of ways, powerful in some ways, weird and incomprehensible in some. But I think there's a real chance of it. And, you know, I think sort of whether or not that happens is going to be some combination of, you know, how well the people building in DeFi sort of do at building out these products, how well they do at enticing businesses and customers to build on them, how the world changes and adapts over the next few years, and probably just like a healthy smattering of luck.
Well, so then on that note, that leads me to my next question about the future. So for those that have been learning about the space, especially me in the past year, I'm learning about macroeconomics, I'm learning about fiat, 1971, we went off the gold standard, there's QE and all this money printing going on. We have a new democratic power in place here in the US. We have another 1.9 trillion package coming in, and you know, people are predicting that the space is going to grow bigger and bigger, especially with Bitcoin and crypto. But what do you guys think? Like when we come to 2025, let's say like January 21st, 2025, what does this world look like from where you sit today if you were to make a guesstimate prediction, because you are in the trenches and you know, you have your bets?
And can I just add?
Yeah.
I'd like to take the assumption of Sam's scenario, because he just said there's a world where a certain percentage, you know, and there's luck and execution and all sorts of things. But let's take that as a backdrop rather than, you know.
Yep,
okay.
Totally. So, you know, sort of like, what does it look like if we end up in a world where DeFi gets huge? Where, and I'm sort of defining huge as at least 100 million users, maybe a billion, and, you know, at least trillions, maybe tens of trillions of dollars of assets flowing through it. And well, let's just sort of start from the basics. How many transactions are going to be flowing through the system per second? You know, you can sort of actually ballpark this. It's sort of surprisingly easy to ballpark it. You can look at number of trades per second that happen on stock exchanges. You can look at number of tweets per second or Facebook posts per second. You can look at number of Visa payments per second, and these all turn out to be into like hundreds of thousands is sort of like the rough order of magnitude. So you're looking at a system that's probably processing, I don't know, some number of millions of transactions a second. And in the cases where this gets huge. And so you can sort of just immediately eliminate any possibility that isn't scaling up to millions. And that turns out to eliminate almost all of crypto right now. Almost no blockchains even have it in their eventual roadmap to try to get close to 1 million transactions a second. And so I think there's just like no chance that that's the medium on which DeFi ends up in the cases where DeFi gets huge. So the first thing is I think it's none of it's going to be on sort of the currently most popular chains. And it's all going to be migrating to chains which are amongst the fastest. And maybe it's one that already exists, maybe it isn't. There's one, Solana, which I've been working on, which is probably the fastest right now and most ambitious in terms of scaling, but there are others and there will be more. And so it's sort of like one sort of like first thing, which is I think like a fairly strong statement in that like everything's gonna have to migrate and be rebuilt from the sort of like incubatory phase that it's in now. And like for comparison, like currently the most popular blockchain has 10 transactions a second. So it's not like sort of like close. It's 5 orders of magnitude at least too slow. And then after that, I think you're gonna have to see a bunch of really powerful financial primitives built out. Like the whole promise of this is that you don't have to build everything from scratch. You can kind of repurpose already built applications, build on top of each other. And so I think that like, that sort of probably means, having order books, matching engines, borrow lending facilities, derivatives creations facilities, having payment networks, having media streaming networks, social media infrastructure, and other things like that built out. And then it means getting a shit ton of users. And I mean, how do you do that? Like, unless you get incredibly lucky, either you have to have some great customer acquisition strategy, or you have to get businesses that already have a lot of users to decide to start building on the blockchain. And so I think you're gonna have to see some combination of those play out to get sort of the activity on chain to a high enough point that random important businesses start to seriously think like, oh boy, should we be doing this? Like, this is where a lot of the activity is happening. And so I think that's sort of like roughly what I would expect the playbook to look like in the cases where it does get huge.
Yeah, I mean, I think for the older people in the audience, I would say when you were doing dial-up internet over AOL, if somebody was pitching Netflix to you, you would say that they were crazy, right? That's kind of like what Sam is dealing with. He's thinking and developing systems that require this massive performance, transactions per second. Yet what we have today is like dial-up. But if you have that vision, if you know that it's just mathematical, it's just programming, we will solve the performance issues sooner or later, then you start to imagine the Netflixes, the YouTubes, the TikToks, right? You can make fun of it too, but then you imagine these applications coming down the pike that are massive. Somebody said where we are. I think we are in 1997 right now when it comes to the internet.
Okay.
When it comes to the big blockchain.
That was 5 redesigns into Disney.com. That's
Yep.
what that means.
Here we go, right? And then, and this is this is kind of like Windows 98, right?
Yeah, right.
Maybe that's what Ethereum is. I don't know, but that's kind of like where we are.
Yeah.
We had ICQ back then, right? Friendster, MySpace.
Yep.
But we
Survived.
also had winners and losers, right? We had like, does that mean that if I go through the learning curve now and I get something going as just a person who's interested in helping my knowledge, I'm not going to just learn knowledge without some stake in the game. Skin in the game helps me pay attention, right? So that's a basic fact of life. So I'm going to put some skin in the game. How do I not end up being the AOL buyer?
Yeah,
well, I'm pretty sure that the early AOL buyers still did okay, even with the sell to the.
Not according to Time Warner, they didn't.
Look, I think you knew when you were switching from AOL and from Alta Vista to Google, and I think you just follow your instincts, right? When you start to use other platforms, then it's probably time to move your investments, your money to the other platform as well. But it's early, it's risky, and I would definitely do it in hundreds of dollars, or depending on how much wealth you have there. It's still early.
So I was hoping you'd say there was some magical exchange thing going on because it's all the same blockchain and my coin wouldn't die, but I guess not, huh?
Sam, you were going to say something?
Oh, I was just going to say, yeah, I mean, it's like, this is a real worry. And I also think Tomas's point is right that, like, you want to buy Google and not Yahoo, if you can. And it was maybe not obvious at the time which was going to be the real one and which was going to be, the sort of like has been or afterthought. But on the other hand, like, it is also true that, like, I mean, Yahoo is doing pretty well, all things considered, compared to if you're a really, early investor in it. And so, which again is very different than if you're, sort of very much like late stage investor in it. And so, I mean, a lot of this is about, like, did you, were you either picking the winner or sort of like early enough and picking a person who at least did okay. But, beyond that, I think there's a lot of parallels just in general. Like, how'd you pick investments or companies, like, how'd you decide where to put your money? And I think, like, there's sort of generic spiel of answers, right? Like, strong team, good background, compelling product vision. I mean, whatever, these sound stupid, but they matter, right? Like, that's half the answer. It's like, I don't know, like, they do a good fucking job, or they, like, lazy, and I think that really is like a decent part of the answer, with maybe a little bit more sort of meme related things being important on sort of in the crypto space than like it's sort of like, imagine if the average stock were like Tesla in terms of the sort of dynamics that controlled it, is like maybe the kind of like right mental adjustment to make as you get like 10,000 different Tesla like stocks, where, I mean, it's sort of like narrative is incredibly important, and Robinhood is very important to its success. And so sort of like adjust your mental models of what causes success by whatever caused Tesla to succeed. And then I think you have like a decent model for, I don't know, how you could at least like have reasonable instincts on what's more or less likely.
Well, sorry, Arry, if you want to go on to your next question, that's fine, but I do have a follow-up. So tell me how you want to play.
Please proceed.
Yes. Okay. So let's say that I completely follow everything that was just said. I'm kind of tempted to go with something Kory's doing because his is backed by assets, and that makes me feel safer as I learn. But that might not mean anything. I also am having a really hard time understanding how to really be an investor in the dream of DeFi, as opposed to just moving my money from one centralized infrastructure to another centralized infrastructure. Because right now I can't tell the difference. Yeah. Can you help me understand how I invest in DeFi and not in basically the new Bank of America?
Yeah, I mean, it's like part of the answer is going to be, oh boy, it's messy, and you got to talk to people in the know. Of course. That's sort of like, an unfortunate part of the answer.
Yeah, just give me some hints, something to help.
Some hints, you can, there are various, like CoinGecko has a list of DeFi related tokens. That would be sort of like one place to look.
So CoinGecko, sorry, I'm typing okay.
And this is, if you've heard of CoinMarketCap, CoinGecko is a CoinMarketCap competitor, which is sort of maybe been the later entrant and less famous one, but far better performing.
Okay.
So it has sort of a list of tokens which are classified as DeFi. It's like sort of arbitrary, but it's not crazy. That's like sort of one place to look. If you Google it, you'll get a lot of different people telling you what DeFi means. But, and this is sort of an important caveat, it turns out that different people mean slightly different things by DeFi, and that this is also related to some of the philosophical debates over what the right direction for DeFi is. And one of the things you'll very quickly run into is the topic of what blockchain it's on, because there are sort of sub-communities that are very much attached to a single blockchain.
Okay.
By far the largest is Ethereum.
Okay.
And you'll get inconsistent answers about whether DeFi is just based on Ethereum or whether it could be on a different blockchain.
I see Tomasz has an opinion.
Yeah.
Yeah.
Sorry, go ahead, Sam. Sorry, I'm sorry. Go ahead.
Oh, I was going to say, I certainly think it'd be on any blockchain, but I don't know that they'll quite say it can't be on another blockchain, but I think like, you will hear opinions about what is real DeFi, legit DeFi versus kind of like shitty knockoffs, which will depend a lot on where people fall on certain cultural divides within the cryptocurrency ecosystem. So, you're not going to get totally consistent, totally consistent answers here necessarily, but you can sort of ask around and get a sense of what the space of DeFi is. And then I would say fucking use the products, like try them out, see how they are, see if you want to shoot yourself or not. Reach out to the teams involved or research them. And, whatever, these aren't super shocking things about how to think about whether to invest in a company, but, do your due diligence on it and think hard about it, in the same way you would if this were a startup you're thinking of investing in, rather than thinking of these as all mature equities that are definitely kind of like boring and generic and you just kind of pick your favorite and it's going to do about as well as the S&P 500.
Sam and Kory, why don't you just guys do like a QQQ of DeFi? Just one ticker, make it easy for Michael.
Yeah, I have, as have other people, and they're not the same.
Right.
So I can show you what my DeFi index looks like. It's not the same as everyone else's.
Well, take that index and turn it into a token on FTX.
Yeah,
we'll
we'll just invest in your token. And
yeah,
we'll be on the game.
I'll send a link here.
Whatever the fees are, just let us know. Kory?
Yeah, I don't specialize too much in the on-chain DeFi space. I specialize more on the bridge that connect the real world to the DeFi world. As in tokenizing real life assets and bringing their value on chain. So I might not be building a QQQ for DeFi tokens, but we are building asset-backed tokens such as gold-backed token, for example, that we intend to be the GLD of DeFi potentially one day.
Right.
So yeah, we work with various type of clients that, traditional enterprises, some of them very large, do billions of dollar in revenue and sales every year. And they're looking at this space, they're trying to get in. And I can tell you, from what I've been seeing, we see like generally two types of enterprise clients that are looking at the space. The first type is the one that have some sort of unique assets they need to distribute, like, commodities or real estate or rare arts, collectibles, those type of things, right? And so they would want to
they want to monetize an asset that they can't necessarily liquidate easily or move around easily. Is that another way of saying?
Or maybe it's just cheaper for them to sell it digitally in crypto form as opposed to in, gold bars or silver bars, whatever, right? So those are the first type of clients we're seeing. And the second type of enterprise clients that we're usually see is the one that has a lot of existing network, a lot of users, a lot of brand, a lot of network effect. And so they want to be able to, turn their brand value, the network effect value into, DeFi value, essentially. And in terms of, stable coin, right? They could issue a stable coin branded after their own, ecosystem, after their own brand, and then they could advertise that toward their own users and promote it within their own ecosystem. One example of this we did recently was with Zatara. They're one of our esports fintech clients. So they're in the esports space, and they created this stablecoin called ZUSD that they plan to promote toward the major, esports gaming team and millennial gamers to use it as a form of payment and prize settlement during esport tournaments and things like that. So like, I think more and more use case like that, as I said, is like the bridge. It's just the bridge crossing from the real world over to the digital world. And once people have then crossed into the digital world, they have become more familiarized with what's there on the other side. They might now be looking at the DeFi protocols that Sam and a lot of other people are pioneering in building as well. Ordinary people, I don't think that they can cross that bridge right now and look at these products or application and use them seamlessly. And so yeah, going forward in the future, you know, I think a lot more education and you know, bridging is going to be needed.
So Arry, again, I just saw a comment in the chat and I wanted to comment on the comment to the panel here. Somebody said you don't invest in DeFi, just like you don't invest in the internet. But actually, a lot of people do invest in things like the open internet versus, say, AOL, or a PC versus a console, or like from a technologist standpoint, or like building the future we want to create. There is a concept of investing in DeFi, even though investing in DeFi doesn't have to do with, you know, DeFi equals better rate of return automatically. It just means I'm investing in a future where there's less people who can control, or like the room filled with the smoking cigars and just making decisions about my life, you know, that kind of thing. Does that make sense, Arry, that the summary that I'm kind of offering, that comment, that reaction to that is like, because I noticed that when technologists talk, we tend to talk about things at almost a religious level. Right? We're like, oh, you can't code in that language. That's a dead language, you know, and they're like, no, it's the best, like the old Windows, you know, Apple wars or Linux wars, or, you know, whatever you want to, any part of the history of modern technology, it gets an almost religious flair. And I see that in DeFi.
Yeah.
I see that in DeFi, and I see that in this panel. This panel and these people that I'm talking to right now might represent like the PC, you know, people versus the people who are like, no, it's just going to be an Xbox and you'll be happy. Be quiet, right? So, by the way, I don't mean to diss Xbox. I just picking on a random thing. So, is that a fair assessment, guys? Tomasz, Sam,
I think so.
Kory?
Yeah, I agree. You use DeFi, and just like you use the internet, and you can choose to invest in the internet companies, like you can choose to invest in DeFi companies, the ones building it, etc. So, I think you nailed it.
Okay, Sam, Kory, anything to add to that, or to help people understand why I would ask a question about investing in DeFi versus, say, buying a specific asset?
It makes a lot of sense. I think that like everyone is still trying to get a handle on what the future is going to look like. And I think there's something really compelling here, but I don't think I know exactly, like I can only take guesses at what exactly what form it'll end up in. And I think anyone who is telling you they're not just taking guesses is certainly taking guesses, and probably uninformed ones. And you know, I think that like there's a lot of ways you can sort of mix and match these pieces, some of which seem more compelling to me than others. But it's also path dependent and messy.
Right. Interesting. Very interesting. Go ahead, Arry.
So I have like more questions, but I also see a bunch of questions happening through the chat. So
I actually have a quick question I want to ask Sam real quick, just to pick his brain really quick. Do you foresee in the near future that DeFi finance or DeFi power political movement or revolutions in authoritarian countries will be a thing?
So sorry. What was the first? So you said DeFi political revolutions. What was the thing before that?
Sorry if I wasn't clear.
No,
Do you foresee in the next few years that DeFi finance political movements or revolutions even?
Understood. Sorry, got yes. The Fi finance got me. Yeah, it's gonna happen some. I think it's a chance it becomes the primary way that these get funded. I would be under 50%, but probably over 5% that happens. It's already like crypto is being used a bit for this, because it's sort of like a classic example of someone who doesn't want their banking system to know what they're doing. And so, you know, I think, yeah, would not surprise me at all.
I mean, we're already seeing USDC and the US government, you know, partnering to airdrop USDC to Venezuelans, right? That's, I mean, that's sort of using blockchain DeFi technology to economically liberate an oppressed population. I think, that could be a very, very common theme in the future.
Yeah,
Okay.
I mostly agree that there's some caveats in that if you don't have access to banking, there's a question of what you do with the stable coins. You can't redeem them. But no, I agree.
Yeah.
Okay.
Then the whole question of regulations kind of comes up because I'm seeing in the chat, there's no FTX in the US, and then I saw a link for ftx.us presented.
Yep.
And then
And the citizenship anecdote, remember, Arry?
like, US citizens, are we going to become second-class citizens in the world because we have so much legatory work to do?
Right.
And what was being done, yes, but not fast enough compared to the other countries. So, and then there's that one perspective, and then part B of that question is, in your opinion, based on being in the background of these different financial products, do these regulations really keep the bad guys out, or do you think there's a better way that the government could keep the bad guys out while still promoting innovation for us?
Yeah, it's a good question. So I guess one thing that I'll say is anything could happen. I would be a little bit surprised if this ended up making the US a sort of second-class country, mostly because I think that in the world where this is what matters, the US is going to find a way to make it work. And there's going to be roadblocks to that and bumps along the way. But I think that higher on its list of priorities than a particular regulatory approach to DeFi is not becoming a second-class country. And so I expect in the end on long timescales that to play out in the US, which is not to say that that is going to be the tension. But, if that did end up being one, but, sort of beyond that, the devil's in the details here, right? There is something real here. It is in fact probably the case that North Korea has used crypto to move money around. This is probably just true. It's a tiny fraction of all crypto usage. So, this is not what most of what's going on in crypto. It's also not none of it. And I think where that leaves you is you have an incredibly promising industry. But there are some regulatory concerns. I think some are ridiculous, and I think some make a lot of sense. And I think that it's just the devil's in the details here. How do you come up with policy that accomplishes the most important regulatory things that you're looking to do, while restricting the industry as little as possible given that. And it's just there's a lot of details here. It's just a lot of well, okay, what if you sort of change this number, that probably still catches most of what you're looking for, but it sort of removes most of the false positives, and I really do think that it's hard to have a really broad sweeping interpretation of this that isn't centered around just the details of the approaches taken by the regulatory bodies. And frankly, we're sort of not far enough along in that process for to know how that's going to play out. A lot of regulatory bodies are still planning the details of their approaches to a lot of these new products sort of in real time. And so, it's sort of TBD where on the spectrum those land.
I'm Sam. The other two, if you want to jump in, that's great. But Sam, I wanted to follow up because Arry also said, can you imagine how we would affect the bad guys? Can you imagine a bad guy I just saw in the chat some statements that, just like the early internet was vilified for various things, and then they had to pass that law that protected companies from content published by their users. Yep. And just like every major technology advancement, you're absolutely right, Sam, it's too early to predict, but if you had to catch the bad guys today, how would you do it? How would you structure it? Yeah,
I think the biggest things, and these are not that dissimilar from what a lot of governments are looking at, is first of all, obviously focus on large transactions. You have to sort of fight your battles. Mm-hmm. And, you're not going to be able to, as a regulatory body, know everything that's going on. And frankly, it's probably pretty bad for the world if you know everything. There should be some limits on sort of the scope here. And so I think, focus on larger transactions or potentially suspicious one. Focus on various nodes of this system that are particularly good for this, where you can sort of like, cut off the access to things you're really trying to cut off access to, while sort of having to be involved in as little of it as possible. And I think that what we're seeing right now is not a crazy direction, at least in some places, which is focusing on large fiat on ramps and off ramps, right? Like basically, one thing you could do is sort of like, have AML KYC policies around businesses that convert between crypto and fiat currencies as a way to sort of have this bottleneck, and have risk-based policies. Be particularly skeptical of things that trip sensors, and sort of trace back from there. I don't know that, like, I don't want to claim that that's the perfect policy and that solves everything with no downsides, but I think that's sort of like an example of an approach that seems fairly reasonable to me and has like a pretty decent ratio compared to some others of sort of like accomplishing what it's trying to do versus invasiveness.
Yeah. Well, I mean, how to catch bad guys? Encourage them to use Bitcoin for their transactions, because everything is on a public blockchain, right? And basically, if you were able to get a triad or an organization to use Bitcoin, and then catch one of them, you just follow the trail. Everything is in front of you. Literally, that's how we can bring down massive criminal organizations if you were to able to convince them to use Bitcoin. It's probably the easiest way to do that, right? So I know it's a bit of a kind of like a headline, and I know, Sam, you're very kind of like, yes, there are ways to get around it. Yes, people can do things, but on the surface, Bitcoin's much easier to trace than cash.
Oh yeah, it's a hell of a lot better than cash from the perspective of stopping AML. Whatever you think about Bitcoin, it should be less regulated than cash is. Cash is way worse from an AML perspective. Now, it's not clear if you should be comparing it to cash or if you should be comparing it to bank accounts, where bank accounts don't have a public ledger, but from a government's perspective, they have maybe a more KYC private ledger. But certainly compared to cash, I agree.
Well, I mean, cash isn't instantaneous, right? Digital is, unless you're using like cash cards or right. I mean, that was the whole point of non-DeFi, is that all the money has to go through somebody, right?
Yeah. Look, I actually don't fully agree with Sam. I think that US is shooting itself in the leg with trying to regulate something, trying to apply old laws and regulations to something that's new and probably shouldn't apply. They should probably do the same thing that they did with the internet, let it get a little wild, and then come up with new laws and regulations.
Yeah, but money is so scary. When the internet was born, it was like, oh, they're just posting information, whoop-de-doo. But this is money, right?
Yes, it's difficult, but I do think that, look, in this space, I would argue that, and US is so used to being the leading country for innovation, right? And you could argue that a lot of the innovation for the internet did start in US. And of course, there are hubs around the world that are doing amazing things, but a lot of the internet, I mean, Silicon Valley is the thing, right? I don't think that the Silicon Valley of blockchain is in US.
No.
And maybe it's not nowhere. Maybe it's actually decentralized and it's very global, which is really, really cool. But if the US government or powers to be want to have a Silicon Valley of blockchain in US, then they are not starting off properly.
That's the argument that worked for the internet. Go ahead, Sam. Sorry.
Oh, I completely agree with that last statement. Absolutely. Yeah. US regulations have forced most of the crypto out of the country, like unambiguously. And it's cost the United States the vast majority of its blockchain-based resources and development. And I think a lot of that's silly. I think a lot of this is sort of like some of these. I think that's what I mean by it being sort of like really down to the details. Is that like there's a lot of factors at play here, and some in particular are really wrecking havoc here for little gain compared to others. And I think I would point to like futures trading, like. The majority of volume in the cryptocurrency industry is futures right now. And the CFTC has not really come up with a great regulatory framework for crypto futures in the United States. And that's cut off the states from, most of the volume. And and I think that's not like there's no AML KYC concerns particularly there. That's not. I think this is not sort of like preventing the most dangerous third rails. I think it's having like really large impact on the industry in the United States. And so I think that there's like some of these that make less sense and some that make more sense. I absolutely agree that some of these policies are potentially destructive. I do want to say though that like, and clearly the US is making a huge mistake if their goal is to maximize for blockchain adoption in the United States or development in the United States. That's obviously not their only goal though. And so while some of these I think are just silly overall, I think others, there's sort of like interesting trade-offs that the government has to make about fostering a particular promising industry in the nation versus, sort of global, geopolitical tensions. And I think that like, again, that sort of makes a lot more sense when you're talking about AML KYC policies for a giant fiat on-ramp to crypto than it does when you're talking about Bitcoin futures.
Interesting. I love this. This is terrific. Thank you.
Yeah.
Arry, I have more. I'm ready, but I'm looking at you just to make sure. Do you have your microphone?
Yeah, okay. I'd like to change direction.
Yeah, go ahead. Change direction. And if I need to, I'll come back. I got lots, but I know that I want to be cognizant of the question set you have. So.
Yeah, I mean, regulations are one thing, but now I want to bring it to Bitcoin because we had a very interesting, let's say like past 6 months, people were all over it. I was getting pinged left and right, Bitcoin, Bitcoin, Bitcoin. And since we're talking about decentralized and DeFi, I would say like Bitcoin was the first decentralized application created and is the first and only decentralized application out there. So, Bitcoin fell in terms of price recently. Like, do you think DeFi is going to kill Bitcoin? Is it going to enhance Bitcoin? Or like, what's the relationship between Bitcoin and DeFi? I know there's like wrapped Bitcoins and stuff like that, but.
And also just for those of us who need it at a 5-year-old level, just remember, because that question's a great question, but I need to understand what I hear. So go ahead.
Do you want to regurgitate?
No, I think the question's perfect. It's just when Sam answers or Tomasz or Kory, just remember some of us barely understand the question.
I think it's very separate. It's like saying, will finance and travelers checks and credit cards, will they kill the US dollar? Well, no, they're like, the US dollar is the base thing that those other things are built to play with. That's how I think of DeFi. DeFi is not an alternative to Bitcoin. It's actually very separate. It's a very separate thing. Bitcoin's money, DeFi is finance.
Okay, help me guys.
Yeah, I mean, I think there's some merit to that. I also think it's like not totally clear cut. It'd be like, I think the analogy here would be if credit cards came packed with their own new currency alternative to the US dollar as well. And they could transact US dollar kind of by trying to plug into that system, or it could use Visa dollars. And that's not how they happen to develop, but they could have. And so I think the answer is it's sort of complicated. I mean, I think that it's not going to kill Bitcoin, but to what extent is it cooperative versus competitive with it? I think it's more cooperative than competitive. And I do think that just like anything that grows out the crypto ecosystem is probably good for all of crypto. I do think that there is an effect here though of like there are a lot of tokens and it's not obvious that Bitcoin is going to be. It'd be, for instance, a little bit surprising, but not shocking if it ended up being the sort of like standard asset that you transferred around. On DeFi, it very well might be the sort of like longer term store value, so to speak. I don't think anything is obvious though, and I think that like, I think these are like definitely more cooperative than competitive, but there's at least a bit of each.
I like the statement about longer term asset. I think that has a lot to do with your earlier statements about transaction volume and.
Oh yeah, absolutely. Bitcoin is not going to be it's like slower than Ethereum. There's no chance it's going to be sort of like the thing everyone's paying with, but
but it's the digital gold or whatever, or platinum or something.
Right, and it's like maybe it serves a role that gold serves in the current society, serve an interesting one that's sort of like morphed a little bit over time.
What about the whole Lightning Network? Isn't Lightning Network the answer to the slow transaction yes and no?
Some people think so.
Here we go.
Some people think so. No one knows for sure what's gonna end up. getting
Yeah,
the
I think
distraction.
talking about Lightning Network is just technology, right? Bitcoin is about as slow as gold and as cumbersome. I agree with that. But there are many ways of sending gold around, and there are credit cards, there are gift cards. There's a lot of instruments, and those will be built for Bitcoin, like they've been built before. So I think if people get stuck on, Bitcoin's supposed to be cash that is used for transactions, no, I think you need to move on from that. Gold used to be used for transactions. At least I believe it was. I saw it on movies, right? When you would drop your gold coin and buy, a night in a hotel type of a thing. But that only lasted a few hundred years, and it's no longer a possibility. I haven't bought pens at the Gap with gold ever, right? So the same thing with Bitcoin. Eventually, nobody will actually buy things with it directly, but it will be used there through some kind of a platform. Would it be a Visa network or a Lightning network or an FTX network or a Stable network? It doesn't really matter. Those are just tools that will come and go. That's how I think about it, yeah.
I'm just trying to absorb it in. I'm getting as much as I can and understanding. I still haven't decided how I'm going to invest that. I think I have more learning to do. So,
is your question mainly strictly regarding how you should invest? Because that, could be a very different thing from
I'm trying to leverage the expertise that we have gathered here today on behalf of all the people that I spoke to in the 601 Club to try to represent our lack of understanding, our complete lack of understanding of what's really going on here. I think I've learned some big things today that I just didn't comprehend before this panel started, but I also have a lot of questions as a result of those. And
my UW finance professor taught me that when I don't know what's going on in the stock market and I don't know what to buy, diversify and dollar cost average. That is the golden age answer, I guess.
So own a little bit of the 6,000 coins currently available on the exchanges.
The important one is the Bitcoin Diamond. It's very hot briefly in 2016, and you never know when it's going to make a comeback.
There we go. All right.
That's not investment advice. Do not buy Bitcoin Diamond. Yeah, I mean, I think diversification is always reasonable. I think that there are wins to it. There's just like the pure win of reducing volatility. I do think it can be overdone if you have an idea. Like if you know it's good, then maybe you go in on that. But if you don't, then there's sort of a little bit of a win to diversifying between various things. It reduces the volatility of your portfolio. Less convinced by dollar cost averaging.
I have to tell you, I have so many people, friends, families, relatives hitting me up asking which coin should I buy, and you just can't take the time to explain to them and be very thorough about it. So the best thing you can tell them is do your research, diversify, and dollar cost average. I mean, that's the best advice, or
well, that's
not financial advice I could give you.
Well, that's why I started with the DeFi element. I mean, part of it's not about me getting rich quick. It's about me creating a better future for the world with my money and still getting rich. So, it's both, right? I want to do both. I can do that by investing in green companies. I can do that by building my own company and making something happen and turning that into salaries. Or I can do that by putting my money in long-term storage in the right set of coins that are not really just either a get-rich-quick scheme or enabling bad guys, or basically the new Bank of America, but based on a lot of hype and circumstance. And Sam, I totally take to heart everything you've said, which is it's too early and we can't tell and nobody knows.
I mean, to be clear, I'd say that despite buying massive amounts of shitcoins. So it's not, I don't believe any of that, but it's,
right.
I mean, I believe, but that doesn't stop me from making investment decisions on my own behalf. Whatever you do, you should do with huge uncertainty, thinking you're probably going to lose, but that's okay. It's what happens when you invest in speculative assets.
That's right.
But obviously I have strong opinions on it. I'm sort of not being super forthright about them just because it's whatever. It's if you Google, it's not going to be hard to figure out what I probably believe in most. But it's not going to be distinguishable, I think, from crap I think is useless with a 2-sentence shell. And so I think the biggest things that I would say, at least how I think about it in crypto, is you know, what teams do you believe in, and what products do you think have a viable pathway, or are sort of amorphous enough now, and might find their viable pathway soon. And I think these, you know, you can filter down quite a bit with that, and I think that like investment theses can work as long as you make sure that your investment thesis wouldn't tell you not to buy Tesla. That's sort of like the most important thing that's easy to fuck up. Is you come up with all these sort of like theses, and all of them will tell you to short Tesla, and then just blow out shorting Tesla. And remember, Bitcoin's still like a lot of copies of Tesla. So, you know, it's sort of like, always remember that caveat. And I've fucked that up a number of times in crypto, but you know, roughly, I would say is like, think about where you're hoping the product will get. It does have a plausible path to getting there, and the people working on it are those people who might be able to get it there.
I mean, I think some people are looking for a shorter answer, maybe easier path there. Sam already, Michael, I don't know if you saw that in chat, provided his 25 coins that he's an index around. I think that's definitely a good start for DeFi. So I would look at those and start my research there. I would also say that, I mean, if you are listening to us and you don't have any Bitcoin, you should have some Bitcoin. You should have exposure to that asset. That's a very good start, right? Have some Bitcoin, and then look at what Sam recommended in his portfolio for the start of your research. That gets you to 25, 26, including Bitcoin. Then there is the CoinGecko, which we also provided a link to, which has the top 200 DeFi coins. Now, somebody already asked, how can I do research on 100 things? Well, a lot of people do, right? So if you have the time, do the research on 200. If you don't, do the research on the 25 that Sam recommended. And if you don't, then just buy some Bitcoin.
So Arry, the question that I want to go to, but I need to know, is about my research so far on coins. I keep getting stuck on governance. The idea of how do you change the rules for the exchange? And I don't know how to ask that question in a way that doesn't turn into a giant mud pit. So what would you suggest?
Not everyone understands governance, or that governance is a thing. So
yeah,
could you?
Yeah.
Give
So
you?
I can give a little bit of background on that. So maybe an analogy, and it's not a politically correct analogy from a regulatory perspective, but I imagine that you have stock, right, in a company. You can vote on various resolutions, and this is generally thought of as like a pretty as a pretty sort of loose process that like doesn't come up a whole lot. And you know, like most people who are sort of like investors in a company, like maybe you don't vote ever, maybe you vote like once a year on some random shit you don't know about. But theoretically, right, like stock gives you the right to vote on whatever you want, you know, or like there's the board, but you can replace the board. I don't know, it's like some complicated processes, but theoretically, it's like the majority shareholders who can vote to change the company.
right.
So now take that and, you know, by analogy, and now imagine a decentralized application.
Right.
And you've got these token holders. So, you know, whatever, there's like, Compound is an example one, Compound Finance. It's a decentralized application for borrowing and lending. And there are these comp tokens that are sort of the tokens related to the project. And a majority vote of the comp holders, I can't remember if it's a majority or supermajority, whatever, can vote to, you know, change how the protocol works. And in sort of like company land, that would mean they have some vote where they write down words and they're like, we're gonna like take interest rates up, and then the interest rate people go like come up with like specific resolutions and enact them, and there's like oversight and stuff. But this is all happening on a blockchain with code. So what you can do here is actually this kind of cool thing where the comp token holders all cast their votes on the blockchain by sending messages on the blockchain, and you write a little program so that automatically you declare what you're voting on by writing the code changes that proposition would make to the protocol. And if the majority of token holders vote in favor of it, then that code change automatically gets deployed and enabled, and modifies the protocol. And so it's sort of a fully automated, decentralized, and
Oh, I lost your audio, Sam.
USB thing come on.
Yeah, there might have been something.
Oh, we lost
That
him.
was the.
He's looking on it. He said fully decentralized and.
Yeah, I know. All right, let's let Sam work on that for a second.
Yeah, I mean, so think of a group of holders of tickets that get to decide how much to spend the money from the donations, from a budget, right? They accept the donations. There are 10 people, 10 women on a board. They all have a ticket, and they decide how to spend the money that they get on donation. Are they going to you know, fix the porch or fix the stairs, right?
Yeah, but what I was actually getting to was, how does my Bitcoin or my board prevent a hostile takeover? Somebody wants to.
Yeah, so Sam, you're muted. It's the simple mute on Zoom. Like he maybe, yeah, now unmuted.
Huh? What?
Still nothing.
What's the matter, Tomasz? Oh.
So look, it depends how the tickets are distributed. If there are 10 tickets, and somebody has 6, they have majority.
Right.
And then depends how you roll the code, right? That do you require 80% or 60%? The difference between DeFi and what you could do with your kids and with piece of paper is that moment, that event where you would write the check and distribute it somewhere can be programmatized. So you never, so there is no one single person that can basically take the votes and say, well, that's nice that that's what you think, but I'm actually going to do something else.
Oh, Sam, I heard something. Is that you? Tomasz, thanks. That's a very helpful answer, actually. But it doesn't tell me how it didn't help me understand the hostile takeover concept. So, and I also want to check in with Arry. Do we still have a working? There seems to be a lot of weird things going on with the event right now. So.
Yeah, the event's still working. I think Sam was going to try and change the batteries on his headset, so he looked like he disappeared to go get that. Yes, he's working on the batteries.
Got it. Okay.
And then I hope people got the general gist of governance. I mean, it really allows those that are participating in any sort of token or crypto ecosystem to have their voice heard. So just like, you know, you vote for the president of the United States of America, you vote to, you know, like I think on some protocols, like if you deposit a certain type of cryptocurrency in a certain DeFi environment, you can get, you know, 3% yield or 6% yield back. And then if the governance token holders decide, no, we don't want 3%, we want 5%.
Can you hear me now?
Yes, we can hear you now.
Sweet. All right.
Yes. So all of that voting happens automatically through smart contracts and code. Go, Sam. You said decentralization and.
Yes. So yeah, it sort of like lets you, fully decentralized and sort of like automatic way, vote on and deploy changes to a protocol. It is basically what governance does. And I think there's a question like, what about hostile takeovers? And sort of the answer, well, there's 2 answers. One is code is law here. There's nothing you can do about it. So it's whatever the token holders vote, they vote. And like, well, it depends on how these systems work. You could have a semi-centralized system where this guy in the middle is like, nah, it's bullshit. But with some of these protocols, like for instance, Compound, there is none of that. It just directly gets deployed and nothing can change that, sort of. And here's the caveat to that, is if you don't like it, the decision that was made, what can you do? What's your superpower? You can go start your own protocol that's exactly like theirs, but made the other decision and be like, their protocol is stupid. Everyone can use mine. And if everyone agrees their protocol is stupid, everyone's going to leave and go use yours instead. And so, and that's what forking a protocol is. And so that is, it doesn't technically do anything about this, but it in practice does give another option.
Good answer. Any other contributions to this question. Otherwise, I want to go to the closer question and then open it up for full-on audience Q&A, which, you know, Michael and Arry will help vocalize on behalf of the audience and get answers from our esteemed panel. Ready? Last question I'd like all three of you to answer, please, is what is the most important thing, because you are the experts in this space with crypto and DeFi and Bitcoin, that we, not in the trenches with you, don't realize, recognize, or consistently get wrong or misunderstand? Please help us.
I think I can try that. I think there is a misunderstanding. There is patience thing. Things take longer. In my opinion, in this space, things will take longer than people expect them to take, and will be significantly larger when they get there. So I think people want to get to 3x in a year. It may take, but instead of a year, will take 5 years, and it's going to be 1000x. So it's going to take longer, and it's going to be much bigger. In my opinion, that would be the summary for the space.
Wow.
I also give a variant on that, which is that that might happen, and it might or it might not, but that you should be thinking about what scenarios you care about and which scenarios you're optimizing for, and you should remember that you know, big numbers do exist. Sometimes numbers that are way bigger than current numbers. It's always hard to keep that in mind, and that sometimes if that's your goal, you do different things than if your goal is sort of like a moderately big number, and it sometimes has profound implications for what's going to matter. And so I think I would say, you know, be aware of that.
Kory.
Right. I think one of the very common misunderstanding relating to my stablecoin asset tokenization space is a lot of people, especially newcomers to crypto and blockchain in general, they think that, you know, stablecoin is similar to like Bitcoin or other sorts of utility token, and there is some way for them to profit from it by just holding it. And you know, I mean, if you dig into enough on into the various ways that you can monetize or make money off of a stablecoin, there's definitely ways to do it. But generally speaking, for those who are new to crypto or blockchain in general, stablecoins are, for the most part, supposed to be price stable, or, you know, nearly price stable, meaning the value should remain constant over time. There are different variations of quote unquote stablecoins that values may go up and down, but, you know, those are not strictly organic or asset-backed stablecoins. So there's a difference in those.
Like
So
the like the social network coins, right?
Well, no, I'm more specifically talking about algorithmic quote unquote stablecoins or tokens that have elastic supplies and algorithmic, you know, adjustment and management of those supply. And you know, the price of those token, you know, it could be worth, you know, $1, or it could stay constant at some time, but a lot of time it deviate very further a lot from what the, you know, quote unquote stable price should be. So yeah, so there's some more due diligence and research that people should look into before they you know, play around with those type of tokens.
Okay, all right. Arry?
Yes, can you hear me?
Yes, now I can.
Oh, always do your own research and talk to people. Well, I'm going to just start landing the plane and then start opening it up to questions. If you have questions, I would put it into the direct chat window versus the Q&A window. Sometimes the things happen where you have people that blow things up and they're trying to be funny, but that's kind of not funny, but it's kind of funny. Thanks for that laughter, that bit of laugh. I want to make sure that we also say, like, another thank you to our panelists and co-moderators and the WTIA for this opportunity to have this event. And I think I've learned so much already as it is. So let's move on to the chat questions.
And I saw one earlier that had to do with not the citizenship question, which gets to our governance conversation earlier, but trusted parties, because I still have to buy my coins through somebody, and I'm maybe US based, maybe I'm not, maybe I'm somewhere. How do I think about the transaction layer of like trusted parties? Who do I trust? I know that seems like a really simple question to somebody who's done their research, and I know that that goes again, but that's what I saw. So I was trying to summarize it.
There's a lot of on-ramps that are pretty well tried and true into the world of cryptocurrencies and Bitcoin. I mean, Bitcoin, I would always say like Swan Bitcoin. Coinbase is very popular. You know, you gotta love them or hate them. They're about to IPO. You know, CoinMe's our local hero here in Seattle. They have a bunch of Bitcoin ATMs in a bunch of grocery stores all over the nation. There's lots of different ways that you can try it. Oh, another thing that I've also heard is you don't have to buy a whole cryptocurrency. You don't have to buy a whole Bitcoin. You can buy fractional ones. You can put in $5, $1, $50, $5,000, whatever your appetite is.
Mm-hmm.
Know that it is a risky asset class. So, you know, don't play with money that you need to eat with, of course. Other ways that you guys want to add as ways for people to on-ramp or get into this digitally native ecosystem?
I don't know. I mean, FTX has on-ramps as FTX US. Feel free to use those. It'll be a lot cheaper than Coinbase, but
Yes.
you know, it's in general, like if you sort of ask around people in the industry, you'll get sort of a sense of what the most common ones are. I think you know, Coinbase probably the most common in the US, and
Friends.
what?
Friends. Friends.
Yeah.
Ask your
I
friends.
just had a friend send me $250 and I sent him some Ethereum because that's what he wanted, right? So he basically, I you know, walked him through, set up the wallet, etc. If we are talking about small transactions, there's nothing illegal about them, right? And basically sit down with them, have dinner with them, and set up the wallet for them. Tell them how to back up the seed word if it's a non-custodial wallet, and send them $200 of Bitcoin, and basically, you know, they'll bring you a bottle of wine or cash or pay for dinner.
So I think that's what people were asking about, is the difference between a wallet that travels versus a wallet that's hosted somewhere, and the idea of, like, you know, the coin wallet that is actually a physical wallet, or, you know, just all those different concepts. Sorry to go. Arry, is there another question that you saw that you wanted to dive in on?
No, I'll just start going through it. Why a wallet? You can buy crypto on PayPal and Robinhood. Why would you need your own wallet? Who wants to feel that?
You shouldn't. I don't know. I mean, sorry, if you're like gonna spend a lot of time in crypto, you should, then you should understand them, and for some purposes you should need them. But you know, the advantage that you're not exposed to the counterparty risk of wherever you're hosting your Bitcoin. The disadvantage is that you're definitely gonna lose your wallet in the washing machine one day. And I don't know, you can sort of make that trade-off for yourself. I don't have typical view. I know this is sort of sacrilegious, but I sort of think it's true. And to be clear, if you're spending 5 hours a day on crypto, then like absolutely you should, you know, learn while you know, software. So I don't want to make like too strong of a statement, but you know, if not, frankly, having like, you know, ways to recover your account by interacting with a human team, if you lose access to your password, is like a sort of nice property of most hosted wallets and exchanges.
Cool.
What do you think about blockchain or crypto evangelists who like to make fun of people for storing their funds on centralized exchanges or crypto custodian companies?
Is a crypto custodial company basically not DeFi because it's a crypto custodial company?
Yeah, I mean,
Very much not DeFi, yeah.
Yep. Mm-hmm.
Okay, so I can't do that because I wanted to, because I have the religion of DeFi, right?
That's right.
Okay, all right.
Someone's asking about Bitcoin blockchain without using lots of energy. So it's the energy question.
Save the planet, right?
Who wants to take that on?
I would say that majority of the new blockchains out there that are competing with Ethereum and are competing in the DeFi space are not heavy energy users. Bitcoin is, but again, I separate Bitcoin from DeFi, right? Bitcoin being more like the gold, like the money, versus DeFi, the finance space. But I would say most of DeFi doesn't rely on proof of work or anything that uses massive amounts of energy.
Yeah, I'd say like the common counter argument to Bitcoin using a lot of energy is, yes, it does use a lot of energy, but so do traditional financial systems. There's physical spaces for banks, there's all the bank tellers, there's all the gasoline that they use to go driving back and forth, et cetera, right?
I mean, you can look at satellite pictures of gold mines, not the most environmentally friendly places, right? So yeah, there are downsides.
Consumes lots of energy, yes, but then there's innovators like Tesla and their batteries, and maybe those could be used for powering Bitcoin someday as we innovate. Lots of different ways to take that. Someone says, Wolfie Wolf asks, can Tomasz tell us about how AGA works? AGA and AGA-R.
We talked about it a bit. It's a governance token. So basically the governance board, it's semi-DeFi, semi-automated. There is still a man in the middle. I think like Sam described it. Not everything is not everything runs on a blockchain, but basically the governance members or the ones who hold the most of the token decide how we invest the proceeds from the mining operation. And it's basic things like, do we buy more miners? Do we distribute the proceeds to the token holders? Do we do some cool marketing? Do we buy more hats? Simple as that.
That's a follow-up. Oh, sorry, go ahead. Go ahead, Arry. I had a follow-up question, but
Go for it.
well, does this open up a whole, I mean, I've heard a lot of like smart contracts, a lot of new implements being developed on top of this. Does this open up a whole new knowledge area of like trying to understand different ways of exchanging value, like instead of traditional ways? Are we on like a whole new, like for instance, I didn't go deep into the social network value or the value of me as a contributor to something. But when you're talking about distributing the funds back to the token holders, or, that gets into a whole new area. Is that like a,
Yeah.
Is that a separate area of research? Is that a whole separate conversation, or is that basically like
Yeah, Michael, you're here in Seattle. Remember co-op, like PCC?
Yeah.
This world is a bit more like that than a corporation.
Okay.
If you're a token holder, you are more of a part of a co-op, less than it's different. So we are trying to use old definitions to define new things, but this feels to me more like a co-op, less like a corporation.
Okay.
Yeah.
Any other comments on that? Any other analogies? Sam, Kory?
There's a pretty wide range of how things work right now and how things might end up. I think it depends on which part you're talking about. Is sort of like really the answer.
Okay.
Yep.
All
All
right.
right. Angie asks, is DeFi the silver bullet for future of finance? What are some potential risks of being involved in this technology? What's the other side of the token that people should be aware of?
Yeah. What's the anti-DeFi position?
Oh, right now it sucks. It's like I don't know. Right now it's like
Sam.
Oh, I meant the anti-DeFi as in the winner, like the other winner. The like, give me a name.
Oh, I see. Right. What could win instead? Traditional finance, like traditional centralized finance, seeing what we have now.
Yep.
Maybe it'll just stick around. There's DeFi has a long way to go before it's going to get mass adoption. Most of DeFi is sort of like, 6 orders of magnitude too slow and expensive, and very simplistic products, partially because of that. Not all of it is. Some of it is sort of closer to production ready for industrial grade systems. I think it could be huge, and it could be huge not that long. But it depends on what happens and how the products develop, what products people use, what takes off, what doesn't. I think that like there's there's something very powerful about having immutable code on chain. There's also something very scary about it, because if there's a bug, you're kind of fucked. And it's sort of like very similar to the fact that you can't like steal someone's money with the protocol. So if you actually accidentally wrote a bug that incinerates someone's money, you might not be able to retrieve it. That's like, sort of one downside there. And, you end up sort of contorting yourself and constraining yourself in a lot of ways in order to make something fit in a fully decentralized way. And I think it's sort of doable, but it's not, at least now it's not trivial, especially as we sort of like pioneer the sort of basic layers of this and the basic building blocks of it. So
people like to blame others for their mistakes. You don't get to do that with DeFi. There is no 1-800 DeFi, where is my token? This is very much you can screw yourself up, basically.
Okay.
I have a friend who screwed up on Uniswap and lost $75,000 on there. So it's no joke.
Yeah, the guy, the old story of the guy going through the local garbage dump because his hard drive was in there with $1 million. Yeah.
It's probably 10 million now.
Yeah, probably. Hey, that's an actual question. If I had, I mean, this is just a hypothetical that helps me understand blockchain better. So this is not, I'm not being literal. I'm just giving an example question. I have 10 Bitcoins. I lose them. Are those Bitcoins never owned by anybody ever again? How does the system recover from the loss?
Oh, probably they're just dead. I mean, it depends on exactly how you lose them. If you just incinerate the secret key and you never told anyone the secret key and it's on a self-custody wallet, then, absence or breakthroughs in cryptographic technology, probably, no one's ever gonna own those Bitcoins again.
So if there's a finite number of Bitcoins, how many Bitcoins are currently permanently unowned?
I've heard claims it's like a lot of them. I don't know. It's like 20%.
Some would estimate up to 3 million.
Ah, interesting.
Bitcoin.
I did not know that. That is actually fascinating.
I mean, you watched Arrested Development, right? The money's in a banana stand.
Yeah.
if you take a suitcase of cash and you put it on fire,
yeah, it's
that's
gone.
it. That's the same thing as losing the password, the keys to your Bitcoin.
Okay.
It's burned.
And it's the same. It's the same for most other currencies.
Yeah.
A lot. I mean,
basically all cryptocurrencies.
yeah.
Not quite all, but close to that.
Okay.
Some centralized cryptocurrencies might have backdoors in them that could let you be retrieved them, but that's something that's probably going to be more prevalent with enterprise and private business back token, not decentralized or community led products.
The backdoor also means that they can probably take it from you, right? So that's the drawback. It's basically who's the ultimate owner? Are you in charge, or is somebody else in charge that you trust?
Mm-hmm. Mm-hmm.
A lot of people are very comfortable trusting banks and other institutions with their money. So I think the custodial option is a very real option for a lot of people, and I don't have a religious angst against it.
Mm-hmm.
If you trust Coinbase, that's fine.
Yep. Okay. Arry, I saw you. Did you have something to add to that, or?
No.
Okay. What question then?
So like the IMF has been meeting, and they have the G20 that met, and CBDCs are a thing, and a bunch of countries are working on it or have been working on it. Are you guys excited by it or not excited by it? And how does that relate to the world of DeFi and this space?
It's very exciting. I mean, CBDC coming out. A lot of them are probably going to be on private platforms. That means, they're not open loop. Some of them might be on public blockchain. And I think, those that are probably going to be on public blockchains are probably more smaller nations, small, like maybe island nations, island central banks, those kind of things. They're more innovative. But I think the general trend right now is among large countries that are interested in CBDCs. They're leaning more toward putting it on a closed loop system. It might be a private blockchain based system, could be, right? But to companies like us, like Stably, that gives us, I see opportunity opportunity in that, because we can then in turn tokenize those sort of closed loop CBDC and also put them onto public blockchain as CDBC backed stablecoins. And yeah, I think it's very exciting. That would certainly make my life a heck of a lot easier, because right now for me to tokenize USD, I have to be reliant on the US banking system, which doesn't open 24/7.
Oh.
So CBDCs are not equal to stable coins.
The definition of a stable, depending on who you ask, is a cryptographic token whose value is relatively stable compared to some sort of benchmark, right? So if a central bank digital currency is able to do that, then sure. But again, if it is a closed loop system type of token, then it's not like the traditional type of stablecoin, which has been strictly built on blockchain system, right? So sure, terminologies, and we'll have to see what the trend is going to be in the industry.
So here's something that I'm hearing just generally, which is yes, there's a lot of innovation. Yes, there's the dream of an open currency, but there's just too many advantages and conveniences of a closed loop, as you say, Kory, right? Of a central hub or somebody who's basically acting as a big bank would. Sam, I know we say there's a lot of unknowns, but it seems like actually we pretty much know how industries like this evolve. We have a lot of background history in how new technologies affect financial instruments, even when there's a lot of innovation involved, which is there's at first a lot of diversification, and then there's a lot of centralization, right? There's a lot of control brought back in. Is there anything that I should take into account as somebody who's learning about this that changes that basic historical lesson?
Maybe. I think that's sort of the structure of DeFi and to some extent crypto more generally. Maybe in some ways makes it easier to have less of the centralization at the end. I don't want to take that too far, because you could say well, isn't everything super centralized in 4 exchanges in crypto?
Mm-hmm.
The answer is kind of yes. Yes, that's half the industry, but sure, okay. I mean, putting that aside, I think that the fact that it sort of naturally elides certain potentially predatory licensing regimes, especially the sort of shit you see with barbers, obviously shouldn't be as sort of regulated there, is, and I think more generally the fact that it removes some of the roadblocks to launching your own project, makes it easier to have fledgling projects take off. And so I think there's some pressures in that direction, but I don't want to make too strong of a statement there, because I think it's totally plausible that it'll sort of also end up somewhat centralized.
Okay, all right, that's fair.
Yeah, I mean, I love, Michael, that I go back to the kind of the internet, right? The internet allow anyone to open a store. You can open a web store and sell T-shirts or hats, whatever you want to do. But over time, a lot of those stores now transact through Amazon, right? Because they provided them a platform that allowed them to transact, ship, and do other things better. So it's still decentralized in a sense that this person, son and mother open a store together, but they still use centralized set of tools. Yeah, so it's a bit of a hybrid, I think.
Yeah, just don't get too good at it, or Amazon will steal your product, right?
Yeah, you have that challenge too. We've heard about those stories, but I think there will be a lot of hybrid solutions as well.
Got it.
Take advantage of both.
That's really helpful. Here's a second question. If I let's just pretend for a moment that I'm about to launch the new social network. I mean, holy moly, it's so great. It has none of the bad. Yeah, just pretend. And I want to back it with a coin. I want to create social capital coin. Okay, because we're having serious dialogue on this platform. It's not just, dodge jokes, right? So, I need microtransactions. I need high volume transactions. who do I go to? Where do I go? What am I even looking for to make that happen?
Yeah, you're looking for a blockchain with high throughput, and those sort of exist. And Solana is the one I'm working most with. I've been working on a decentralized ecosystem on it called Serum, and Solana is at 50,000 transactions a second right now, probably going to get to around 1 million in a year or two, and it costs something like 1/100th of a penny to send a transaction.
Wow.
And so that's it's a hell of a lot faster and cheaper than most. There's a few other fast ones, and there may be more coming, but that's certainly one possible answer.
So we go to
build
Sam.
your own.
Or build your own. But Tomasz, if I was going to build my own, what advice would you give me besides don't?
That'd be my advice.
Yeah, I think the advice will, decide if you are a platform, if you are .NET, or if you're an application.
Ah, good. I like this conversation.
Decide what you are. So if you are an application that's built on a platform, but look, then we go back and look at Facebook and Google. The reason that they were so successful is because in order to be so successful at that scale, they had to build some of the tools themselves, because none of the tools that they could have bought could have done it, right? That Google and Facebook have their own design of data centers, etc.
Right.
Because they couldn't just buy that scale from Amazon or really anybody else. So depending how big and how powerful your social network will be, right? If you are going to be 10 times bigger than Facebook, you probably need to build your own blockchain because nothing out there exists. But if you're going to be a tenth of the Facebook, let's say focused on a country, then I'm pretty sure the tools.
No, yeah, we're definitely going to be. No, in this hypothetical, we're going to replace Facebook easily. It's like a blip. So then the question becomes, how do I relate to the current blockchain world, right? Am I just eclipsing, or help me understand how the technologies get along, other than that they have blockchain underneath, as a base technology.
There's some sort of bridges. They're kind of clunky.
Okay.
Sort of get things back and forth. They're usually sort of centralized. It's not like I don't think it's a great answer. I think it sort of is the answer though.
So I couldn't just declare as the magnanimous owner of this amazing network that it was blockchain. Said that it was Bitcoin, and then we were built on top of Bitcoin value. That it basically, like, we just bought a bunch of Bitcoin and that kind of thing.
Well, so how would you make it the case that by transferring a Bitcoin on that network from person A to person B, the Bitcoin network would respect that transfer?
Well, so I would, of course, have to be the intermediary, because I couldn't do it on the Bitcoin network. I would have to.
Right. So you could have a centralized intermediary,
right,
who then vouches for it.
Mm-hmm.
It's not clear it's exactly a blockchain at that point. It might just be a database, which is fine. And that's what exchanges are, right? Like, exchanges do ledger transactions, like paper trades between accounts, instead of like paying gas on each transaction. Just remember how many Bitcoins everyone has, and when they request a withdrawal, you know how many to process. So totally legit, very valuable business. Not, I wouldn't exactly call it a blockchain, but that's okay.
Okay. All right. Well, I'm sorry I took us off on a little tangent there, Arry. I was just I was trying to test my knowledge, and I think what I learned was that that if that network did exist, if that social network did exist, and suddenly people's networks were worth money because their data is worth money. This is all the old question of, is data money, right? Is my data worth anything? Yep. And if I did that, I'd have to be amazingly transparent about the exchange somehow. Like I'd have to somehow be amazingly transparent. Otherwise, I'm just another B of A, right? Am I right?
Yeah.
Yeah. Or you could put it on a blockchain. Like, you do this all on chain.
Um,
But then I can't do the speed of transaction, right? I mean, I got.
Well, if you do it on a fast blockchain, you can, but you can't. It can't be in a fully decentralized. Very hard to do with Bitcoin in a fully decentralized way that's also fast.
Yes.
Given that if it's fully decentralized, probably you're gonna have to be transferring Bitcoins constantly, and that's
Right.
not gonna happen.
So that means I'd have to invent a new way to be transparent about my centralization above and beyond the blockchain element. In other words, my governance.
Or right. Or sort of trust a means of currency that is a crypto token that is not Bitcoin and is native on that blockchain.
Right. Okay. See, that's not me trying to put together the pieces. Like if I have a business and it's going to create a lot of data value of any kind, whether it's mapping technology, driving technology, because that's what a lot of our audience is here today, is they are sitting on data value and they don't know how to monetize it. But a lot of the best ideas are microtransaction friendly, and
Absolutely.
that's high volume. And the problem is, how do you build something that retains the trust of your data providers, right? Because they're co-owners in the network. Otherwise, you might as well just go to Facebook, right?
Yep, exactly. And so, I mean, we're, one team that we're working with right now is it's maps.me. Say it's a mapping app, has like 140 million downloads, and building DeFi infrastructure with them for financial transactions, governance, and other things on their app. And it's could end up being quite high throughput. It will in the cases where it goes well. And that sort of requires it to be on a fast blockchain and using assets that are native to that fast blockchain as the means of value, or sort of like wrappers, like semi-centralized wrappers on other blockchains assets or fiat currencies or something like that, that are sort of like listed on that fast blockchain.
So, and then what I would, if this network existed, I'd need to attract all the Tomaszes of the world to it, right? Because at the end of the day, I'd want them to be the true believers. Otherwise, why bother? If I can't attract the Tomaszes, right, then I'm not going to get anywhere. But at the same time, I have to be legit. I have to be able to secure it. I have to be able to give you your username and password back. I got to let you delete your data, all that kind of good stuff. Same with the map app that you're working with, I assume. They're trying to solve those problems.
Alameda just led the round for that financing, right?
Yep, we did.
Yeah.
Oh, okay, cool. I like the idea that a town can own its own map, right? Like all the people in a town can be like,
cool.
This is the real map.
There's a mountain here. That's how it is.
Yeah, that's where the duck lives. All right. So I love that. Arry. What else?
I think we should start landing the plane. If folks want to get in touch or learn more about your companies, follow you on some social network, centralized social network, or get in touch, what's the best way to move forward?
Yeah, and I'm going to paste my LinkedIn in case people want to yell at me for not having asked their question. I thank everybody who gave me the feedback too. Go ahead, everybody. Sam, Tomasz.
Yeah, I'm on Twitter is where you'll find me most. On SBF Alameda there, I'll post a link there.
Great.
All right. You can also check out Stably at www.stably.io. Our Twitter handle is at StablyCoin.
Thank you. And Tomasz?
Yeah, so I'm trying to get my LinkedIn link.
I was hoping Tomasz would say, "Leave me alone."
No, I'm polite. No, don't leave me alone. It's all good.
Okay.
And if you want to learn more about AGA, just go to the website, agatoken.com.
Here, I'll share the link. Here,
Okay. Yeah. Kory posted to the panelists, but not to everybody. There we go.
I did the same thing.
Yeah.
I'm sharing. I got Sam's.
Okay.
Here's Stably, Kory.
So I did.
Yeah, thank you guys so much for your time. Thank you for spending, a couple hours with us and answering all these sorts of questions and enlightening us on the world of DeFi and cryptocurrencies. Hopefully for those that are watching, this was informational for you as well. And definitely the link to the Slack channel is in the invites. So there's a whole community here. We're here to help and be a resource to the community. And if you have any other questions or want to be connected to anybody afterwards, please just let me know. And then thanks again to the WTIA, the Washington Technology Industry Association, for your sponsorship of the event. Thank you to the 601 Club for all of your great questions through Michael Alcock. Yeah. And thank you again to our panelists, Sam, Kory, and Tomasz.
Thank you. Thanks for organizing. I know this is not easy.
Thank you. Thank you very much.
Thank you, Arry.
You're welcome. Have a good night, everyone. Or a good day to you, Sam.
Yeah, good day to you, Sam.
Thank you,
Great
guys.
questions. Great
Take
job.
care. Take care.
See you
Thank
guys.
you. Bye.
Everyone.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again, and enjoy the show.
What are you doing?
Stuck inside.